Hello, thank you. I am well.
Good, great to see you. We'll invite everyone who's seeing you and hearing you here today to send questions in over the next half hour for you, and we'll put those to you. Let's go into a bit of the sentiment story of the consumer. We've actually got some PMI, some purchasing manager indices that are showing that those are up. I mean, in anticipation of managers ultimately selling, that's looking good. Tell us about the confidence side of things right now in Europe, UK, just generally what you're looking at.
So in the last few weeks, the weather has massively improved, and I'm sure that has had a positive impact. It has been quite a miserable crisis impacting inflation. We have had and continue to have elections going on in many countries, with the outcomes quite stressful, I think, for a lot of people. So obviously that is impacting the economy, but the European economy has always been much less volatile than the US economy. And in a similar way, whether it's the downturn or the rebound, it all happens in a much more narrow band than what happens in the US.
That's really interesting. Just tell us a little bit more about that narrow band, and I guess how you use that to read things.
Have a different social contract, and the unemployment rate moves really, really slowly, or the employment rate. So the adjustments in terms of laying off or hiring employees, it does take time. The consultation period is much longer. So whatever impact the cycle has, it plays much more slower through the economy. And I think we are now seeing a bit of improvement, but maybe not as strong as we would like to see. But there isn't, to be honest, there isn't that much of a change in the environment. The interest rates are what they are. I would say the environment is kind of stable, nothing too exciting, but also nothing too negative from the European point of view.
When I think of some of the conversations we've had, I often think of you pointing to the trend of beauty, and that really being almost inelastic over the last couple of years. Is that still the case? Are you seeing that kind of spending and commitment from consumers?
So beauty, obviously, beauty is very important in Europe and for European consumers, for European women. But the growth of the end market in beauty has been actually quite sluggish for quite a while, and it's only in the last few years where we have seen a boom in the beauty industry, even in Europe. And there are a few different trends playing into it. In a very surprising way, coming out of COVID, the category that has become very exciting and growing really strongly is fragrance. Somehow, coming out of COVID, maybe there was an issue with losing sense of smell that some people had. But more importantly, social media has taken on beauty and fragrance as a category where people have, there's a lot of influencers that have become experts. It's almost like with wine. You train your nose and then you know what's good, what's not good. There is a fragrance for a different occasion. Millennials, Generation Z, they are all over it. And that category that has been sleepy and really not much happening has become really exciting space where there's lots of innovation, lots of new fragrances coming. And that trend started, I think, in Europe, and it's also quite strong in the US and in Asia, in China. Perfume was something that was completely not socially accepted because you kind of impose your smell on the others. Guess what? Today in China, the Chinese are reaching out for the most expensive, most kind of sophisticated fragrances, and that trend is quite powerful there. So as always with consumer, you always find some space, some niche where there's excitement and where there's a lot going on. And the best companies in this industry, they are good at figuring it out quite early, and they are very good at innovating into that niche and exciting that niche and making it even more exciting, because you need the engagement, and this is obviously a category which is not very high price, and it's a category where as we've discussed, the social media is also creating lots of buzz.
Is it men and women? There are colognes for lots of different occasions that really anyone can buy. How do you look at that, or is there something equivalent of interest for others? I'm just kind of curious how that breaks down on the demographics.
Definitely men and women, but the younger. It really is the kind of Generation Z that is all over that trend, and looking for niche, sophisticated fragrances. I actually went 2 weeks ago to Grasse, which is the kind of place where a lot of perfume has come from, and the region is booming because all of a sudden it has become a really exciting category. People who develop perfume are searched after because there are not so many experts. You need to train your nose for decades to be able to come up with good perfume.
Wow.
Yeah, so
It's like being a sommelier. That's amazing. That's so interesting. When we went through some of the trends in different areas of retail, of consumer, there were some cycles. There were some destocking cycles in certain areas. Maybe this is all still emerging from COVID, but just take us through where we are in some of those cycles and the cyclical aspects of the consumer demand story.
So I think the consumer is still very hesitant when it comes to anything big ticket. Anything that requires debt funding is really not easy for consumer to decide to purchase, because obviously the interest rates are still very high. So anything to do with home improvement is very sluggish. The auto sales, we have seen the EV sales trend that was quite powerful, driven by the desire to become more environmental, that almost has gone into reverse without funding. It's really quite hard to do that. So I think this is what's playing out, that the higher ticket discretionary nature items are suffering, and then the little more kind of feel good spending is still there because it's easy to afford, and it creates kind of feel good that it's hard to achieve with the purchase of a new Tesla because it's just not affordable.
When I think of you, I think of chocolate. And I feel there could be worse things to connect to someone like chocolate's a wonderful thing. But when I've been watching cocoa prices, and the world has been involved in this sort of commodity story, and therefore, the big players within, they must be taking a hit. How is that working out for some of the companies that you once followed or maybe still do?
Yes. Yeah, it's quite an interesting end market, and only a few weeks ago I had the chance to sit down with the CEO of Mondelez and talk exactly about that. And what happened in chocolate, they have increased through COVID, like in a lot of consumer-facing categories, they have increased prices by, I think, 30%. It really is quite a step up in terms of how much the products have gone up, and they haven't really seen a negative reaction in terms of volumes. Again, little price products, feel good, maybe the last thing you will think about cutting. But with what happened with cocoa prices, they need to take it much further. But I think the company is now very cautious to do that, because I think if you take the price by another 30 or 50%, you really risk putting the consumer off, and then it would be very hard to bring them back to the category. So I think companies are trying to be responsible, and they are trying to think, how do we keep the consumer engaged? And obviously that might not be pleasing to investors when you see the profitability being hit in a massive way, and we don't know where cocoa prices will go. So it does create times of uncertainty because the demand might be there, but obviously if the company is not earning that much, we don't know whether that's how sustainable that could be.
So big ticket items versus smaller indulgences. Where do sort of some of the restaurant and I mean spirits as well, but I think there's a sentiment that restaurants have become so expensive, they've almost priced themselves out. Is that true? I mean, do you notice that in if you were to invest in certain restaurant companies and maybe they're for a lower price consumer and that sort of thing, so maybe it's fine, but just comment on sort of food and drink and prices story there.
And any of my friends who happen to go to the US on holiday come back complaining that they have been just completely robbed because it's so expensive to go out, and even a visit to a Starbucks, like $10 doesn't get you much. Prices haven't gone up that much in Europe at all. I think things are still much more affordable, and this is why we are seeing such a massive migration of tourists coming on holiday here. It's just so much cheaper. But you're right. The pricing has been moved way too high, and in some cases we are seeing the consumer turning back and saying it's too high, and the likes of Starbucks, I think, are suffering partially because of that. But then there are other examples of companies like Chipotle, and I've been following that story for a long time, back to the time where they had issues with food security, and there was like hope was lost that this business can ever come back. And at that time, what excited me about this company was the fact how they cared about the freshness and quality and preparing things on site and making sure that it's healthy, and then making sure that the price is very attractive. So part of the success of Chipotle is also that they haven't taken the pricing as high, but they have invested in the efficiency of the restaurant to the extent that now I think there are jokes on social media that it's so fast that you might not get your rice in the bowl because the line is moving so fast. So again, there are limits to how companies can put their business model. But I think being conservative when it comes to pricing usually does play in the long term.
So much of all investing is relative, and their currencies. You look globally for how these trends play out. You told us a bit about sort of the European story versus the US. The big question is always the Magnificent Seven, and to the extent, and many of them are consumer facing, as we well know, good companies. Where do they fit in terms of positioning? Let's go to positioning of the fund, and ultimately where the Mag Seven fits, if it fits at all in your fund.
I've been a fan of basically mostly, to be honest, all of them for much longer than they've been fashionable. so
That seems to be what you do. You catch things before they. You're a trendsetter, yeah.
Yes, I have looked at their business model, and I have been long kind of appreciating how scalable those businesses are, and how agile, but also looking at consumer behavior and seeing the engagement of consumers, whether it's on the site with Amazon Prime, and how Amazon Prime is a utility for the wealthy households, and they basically don't look outside of Amazon. Everything just comes through Amazon. Or in terms of social media, if TikTok is banned in the US, guess what? Meta is becoming more and more powerful. So those businesses really are benefiting from being global, from amazing scalability, and now implementation of AI. The first step of using AI is really in improving efficiency, and those companies are doing that. And we are seeing they had a massive step up in hiring and capex through COVID. Now they're doing the opposite. The earnings and the cash flows are coming through very powerfully. And today there's a lot of talk, are we at a time of a bubble because of the market concentration and the fact that the few companies are driving it? When you take a step back and when you look at the combined PE multiple for the top 7 largest companies today, and you, for example, compare to what it was in 2000, which now today we know it was the peak of a bubble. Back then, the top largest companies, the combined PE multiple was 50 times. When we look at the top of the Japanese bubble in 89, the combined market cap of top 7 was, I think, 60 times. Today, the combined market cap of the Magnificent Seven is 7 times. It's hard to talk about a bubble when the performance of those companies has been driven by their relative earnings. They really have been the main driver of SAP earnings. And today, obviously, the question is, will that continue? And can that continue? And I think their ability to use technology to enhance the business model is just making them stronger. But obviously, question of regulation, taxation, these are probably the bigger issues to worry about. And down the road, for sure, we'll see them.
Tell us about the weight loss drugs. These have been on the market for a while. The story of what companies are going to get sort of hit because people perhaps will be eating less. It was a big story, probably lots of overreactions. That said, how's it doing? I mean, the stock is incredible. Give us a bit of an update.
Yes, so here I have invested in Eli Lilly and Novo a while ago, and what brought me to the story is consumer, because I've seen a lot of excitement. We've done research, surveys, talking to pharmacy operators, and what do they see, and hearing from a pharmacy operator that they've never seen anything like that, where the consumers are coming and asking for the product and trying to find, and it really is quite an unusual situation, but it is explained by the science. 2 months ago, I decided to join the Investor Day of Novo Nordisk because that was a really great opportunity to go and visit the factories, but also see the head of R&D and really talk about what they know and what they think those products can do. And it's not often that you find a product, a drug, that has positive side effects that even the scientists behind don't fully understand the mechanics of how it works in our body. So obviously, always with drugs, we worry about the side effects and what it can do, and there are risks that some negative side effects might come up. But so far, we are seeing positive impact on cardiovascular health, on mental health, but much more basic demand driver is obviously the weight loss, and especially now going into the period, the summer, the beach holiday. I think there is a lot of people that have been planning ahead and using them.
So what's the second derivative? So I mean, there's the second derivative almost of stocks that like you want to avoid, but what's the second derivative of weight loss and then spending, the consumer? What are they doing with the fact that yeah, I mean, they've perhaps changed their lives in this sense?
Yes, I think it's still too early to see, because the adoption of those drugs is still mostly because it's not so easy to get them, and it takes time to actually see acceptance. And interestingly, the first wave of adopters are actually women in the 40s, 50s. I think they're not that popular with men. I think men are maybe more afraid of injecting and maybe less worried about the looks, but the kind of current wave of adoption is that, and I think what will follow is more spending, whether it's clothing or going out or socializing, just a return of self-confidence. I think has
Like a
only
new wardrobe, or a
a new
new
wardrobe,
yeah.
maybe a new job that pays more because someone just gains back their confidence and has more energy. So I think the results should be only positive.
That's fascinating. So interesting. So, take us to travel and leisure. We've touched on some of it here. What does it represent again within the portfolio?
So around 10% of the portfolio is in that category, and it is because again, coming out of COVID, I think that was a life-changing period where I think we have realized that you live once and you should enjoy it. And I think travel has become a priority. And I think companies that there is a number of business models that are actually becoming they are improving. They are also using technology, whether those are hotels, building big loyalty schemes where they communicate directly with consumers, where they become better at operating the hotels, less labor intensive. So I see quite a lot of opportunities. I see opportunities also, for example, in India, where the penetration of hotels is very low, and they benefit from the economic growth that the infrastructure spending are driving, and obviously that creates opportunities to open hotels. So yes, that space of the fund has been. I've kind of allocated 10% of the fund, and I think of it as something that is structurally attractive, and I want to keep it this way.
So, tell us a little bit about your style, your process, and within that, maybe with that as an example, I don't know, but do you begin? Where does valuations fit in here? So, I mean, a lot of people say many things are expensive right now. But that said, how does your style and process work when you're choosing stocks for the fund?
Well, my process really does start with the consumer and trying to think where do people spend money, and I try to identify niches which I think are attractive, and then I spend quite a lot of time trying to understand who are the best players, who are the winners. Sometimes the niche is attractive, but there are lots of players, and I would like to have exposure to a few of them. Sometimes I think there's just one winner, and I want the winner. In e-commerce, I have Amazon and not much more because I think the space is really hard to make money. So it's about trying to think almost like a consumer, but what I try to do, I have quite a long watch list that I have compiled over years, looking at companies and trying to think about what kind of growth they can generate, what kind of profitability in the best case scenario, and how will the market reward them for that with the multiples. And then I'm also trying to think, okay, if a recession happens and the top line maybe goes down and the earnings likely come down and the multiple possibly also is going down because that often happens for growth companies. What is the downside? And I look at this upside downside on a daily basis, trying to think where are the opportunities within the portfolio. So my analysis is not kind of static. This is the PE multiple, and this is what I get today. My analysis is more like this is the upside, this is the downside. Where are we today? Which one is more likely to come through? And that also leads me to allocate funds to stocks within the portfolio, larger positions, smaller positions. The larger positions tend to be companies which maybe have less volatility and smaller spread in terms of upside downside, but I think the likelihood is higher. And then companies, smaller positions are those where the outcomes can be hugely different, but it could be double, triple, or maybe the company can really be in trouble. So it all is driven by this kind of risk reward analysis, which is quite dynamic and also backed by the fact that I have gone through the business models with analysts, and I continue to do it whenever I get an opportunity to interact or I go through the results. So it's an ongoing process.
The amazing, sometimes very old European or otherwise, consumer brands, which you look into, and they're often very, very big companies. They, along with every other company on the planet, is looking to see how AI will impact them. the companies that have stuck around for many years have had to innovate their way to stick around already for probably decades and decades. What next for some of these not ancient brands, but strong brands, name recognition that have been able to reinvent themselves over the years? How do you see them traversing the next 10 years?
I think it's going to be exciting. The only question is, will the consumers have money to spend? Because if we get replaced by AI, that might be a little problem. But in terms of what those companies can do, I think the opportunity really is in personalization, getting to know the consumer better, making the innovation fit the need of individuals, then being able to communicate. I think this opportunity, and for that you need scale, you need ability to basically use the technology, but also ability to integrate the supply chain into your IT, and then come up with the products that really please the consumer and satisfy their needs.
Any examples?
So we have, well, in fragrance,
Yeah.
there are attempts to come up with more personalized opportunities. I think you can obviously, long time ago in haute couture, the dresses were personalized for those who could afford them, and I think as we go forward, there is so much wastage in, especially in apparel manufacturing, and things that get discounted as a result. The best companies, I think, are going to be able to move to a much more personalized product that sells at the full price and doesn't end up in some kind of discounting off-price shop.
Less commoditized and almost a return to haute couture via AI.
Yeah, that's the time dream.
Cool. Okay. Actually, you said something about eyewear at some point. I just thought I'd remind you because that was something we talked about, I think, before.
So eyewear is already becoming personalized because obviously everyone's eye is different, and especially when people get presbyopia, everyone kind of goes through this age and digital kind of technology related disease in a different way, and back in the days we used to have the multifocals where the top and the bottom of the glass was looking close and fine, and it was really quite a poor solution. And today the way Essilor has come up with solutions where they really analyze your eye and the lens is completely personalized for what you need. And I think that will only continue to progress, and I think really that is the opportunity for the consumption in a way is going to become more efficient as well. The whole of the economy is becoming efficient, and I think our consumption will become more efficient as well.
And you're at the forefront tracking these companies that are doing this. Very, very interesting. Thank you for your time, Aneta. I appreciate you being with us, and wishing you a very good weekend.
Thank you. Have a good weekend as well.